What's up everyone, it's Karthik with MoneyVest. Welcome on board for our live stream for the unemployment numbers that are coming out later today. So this is Unemployment Friday, as this is the second Friday for the month of January. Usually the numbers come out on the first Friday, but since it was New Year's Day on Thursday and then Friday was the first Friday of the month, we got a little bit of a delay, but we are going to get those very important unemployment numbers today at 8:30 a.m. Eastern, so in just under 30 minutes. Hope you all are ready. If my audio and video is good, just give me a thumbs up and we should be all set and ready to go here to take a look at those numbers together and how the markets respond to those numbers as well. So hope you all are doing great. We do have a poll going on right now for whether you believe unemployment rate is going to come in below 4.6, at 4.6, or above 4.6%. So definitely do participate in that poll, and we are ready to go here. These are the expectations from the market for these numbers. 55,000 jobs added in the month of December. So that is where the consensus is. Unemployment rate expected at 4.6%. That's exactly why we have that poll. And then private payrolls at 55,000, manufacturing payrolls will see a bit of a decline, 10,000 jobs lost in the month of December, and then 0.3% for the average hourly earnings month over month, and 3.6% for year over year numbers. Do me a favor and share this live stream with as many people as possible. I would really appreciate that. So I'm going to copy and paste the link for sharing as well. Sharing is caring. Definitely invite more people, more traders, investors, everybody to join the live stream so we can have a very, very engaged discussion and definitely have more votes, more data for the poll that we are doing right now. The more the merrier in this live stream. So definitely share, encourage other investors, traders, family, friends to join us to take a look at this unemployment report. Markets, pre-market, we are pushing up 19-20 basis points for the S&P 500, back up to over 690. We got QQQs trading up to over 622, 27 basis points higher. The S&P has been sitting at all-time highs. The Dow Jones has been sitting at all-time highs. The NASDAQ is a little bit shy of all-time highs, 1.5, close to 2%. And then we got NVIDIA dropping yesterday. Most of Magnificent 7 and technology was down with the exception of Amazon. And a few other companies, including Google, pushing up to new all-time highs at 326. Tesla also pushing up over 1%. But other companies, NVIDIA, we got Microsoft, Apple, Meta, they were all selling off yesterday. So Meta was down, trading down to 646. Pre-market, it's even lower. And I do have the 650 call now for Meta Platforms for next Friday. And then I did close out the NVIDIA call as well. So if NVIDIA rallies back up to 187, 188, 189, closer to 190, I will be looking at opening 2 new calls for NVIDIA once again, although I do have the 170 call for September this year as well. So we got lots of trades to take, lots of things to talk about. Palantir, Broadcom, and Netflix. Those are 3 stocks that I am considering from a options trading perspective. So those are the 3 stocks I mentioned yesterday in my market update. I'm looking into Broadcom for a potential buy right or even selling a put. And then I'm also considering Palantir accumulating more shares at slightly lower levels. Ideally, I would like to get it at around 160 and preferably down to 150 in the options portfolio, and then sell some calls against those shares as well. So this is the unemployment spreadsheet. We're going to update this number, which is the unemployed persons in the United States, and compare it with the JOLTS numbers at 7.15 million. And we're going to arrive at the new ratio. And if that ratio is dropping below 9, I think it's going to be quite concerning for the Fed and also for analysts and for monetary policy, for economy, for the markets. It is going to start being a bit more concerning because even though it might be good news for the market, it may not be great news for the economy. Markets and economy are 2 very different things, just like the price and the company fundamentals are 2 very different things. The price fluctuates every day. Company fundamentals we learn about 4 times a year, every quarter. but price and valuation changes every single day. And that's exactly what it is when it comes to the market and the economy. Economy trades more on fundamentals. It's more on how strong the economy and the labor market and economic growth is. And market is very, very fast moving, forward looking, based on very real time events and data points that are coming out. So good morning, everybody. I want to see a lot of people in the chat. I want to see more engagement. I want to see so many messages that I can't keep up. Like, I really want a lot of engagement, and I want a lot of questions, a lot of Q&A, because this is your time. This is the time that we spend together every morning. And my goal, my only purpose is to answer as many questions as possible for every single person that joins our live stream. That's the goal. That's the target, is to get to as many questions as possible so I can help as many people as possible. So couple things: share the live stream, drop a like, and engage in the chats, ask questions, share opinions, share perspective. Everything is welcomed. Good morning, money investors. I only share with me, myself, and I. Good morning, all. Thank God it's Friday. Google the Magnificent, yes, sitting at all-time highs. I'm getting more and more bullish on RCL. Any macro hit it may take, in my opinion, is a buying opportunity. I'm holding for the long term. They broke ground on a new port terminal in Miami yesterday, so that's great. Let's take a quick look in RCL, so Royal Caribbean. Cruise lines, as we know, during COVID were taking the biggest hit. It took them a while to get going. Up until 2023, it was essentially flat from the COVID drops, and from its lows from back in June 2022, it's up over 881, almost 900%. So of course, they've come back thriving, as a lot of people have been taking cruises. In fact, many of our members, Kevin, Rosny, they've actually gone on cruises as well. I'm yet to take my first ever cruise. I've never gone on a cruise before. But overall, I think the business is expanding again. Profitability is coming in. Earnings have been with very strong beats, and it's good to see that companies are once again doing very well. As you can see, the revenue, profitability, everything is expanding and moving in the right direction. So I'm with you, Mike. I think it's got potential long term as we continue to see a rise and recovery in hospitality and leisure, and resistance going to be up to 360. And it's got a very nice uptrend of higher highs and higher lows. So this is the entire pattern. It goes up, comes down, goes up, comes down. That's a nice little dip that it's been breaking out of every single time. So I'd be watching this resistance here at 360 and a very strong support for a good area for accumulation around 245, 250 for RCL. So that's a pretty good price point. Good morning. Nice touch on the Jensen emoji. Yep, so we added that as well after Kevin gave us a 1-star review. So I had to definitely cave. I know he's been asking for a long time. So Jensen Huang emoji is done. And anything else, any other emojis, let me know and I'll put them out today. Intel looking good. CPUs are the next bottleneck for AI servers. Yes, so Intel has also been recovering very well. So from its lows of around $20, $21, $22, it has moved up very nicely, more than doubled, back up to over $42. But the long-term trend continues to be very concerning for Intel. I mean, it kind of goes through these big bursts and these cycles of momentum to the upside, but then it consolidates and then, drops right back down. Because if you really consider where Intel is, it's at the same price as it was back in 2000, right? So it's been 26 years and Intel has not really given us any reason to be bullish on, and the growth has really stalled. For a company to be at the same exact price, just look at it right now. It's at the same price as it was back in 1990, like 2000. That was the peak, and then it crashed over 81%. It took Intel well over 20 years to recover back to where it was. And then another couple dips, major dips at this lower high. And it's now starting to recover back up. So it is definitely one of those companies that is taking its very, very sweet time in recovering back higher. So for me, Intel is just one of those companies that's a bit more value defensive name with a decent yield, or at least there was a dividend yield up until a certain point, and when they completely removed that dividend yield, and now it is purely focusing on this was 2024, the last time they issued a dividend. So after that, you'll notice that it actually also collapsed quite aggressively, consolidated sideways. It's now starting to move back higher. So kind of mixed on Intel right now. Good morning from Lakeland, Florida. Thank you so much for joining. Meta's been yes, Meta has indeed been sucking quite a bit. It has been all over the place, which is a good thing for us option sellers. When we are selling options, what we want is a boring stock with high premiums, right? So premiums giving us a sense of volatility. The market's pricing in that every time somebody's buying calls, they're buying calls on this assumption that the price is going to move up and there's going to be a volatility, there's going to be momentum, there's going to be volume. But the reality is that Meta's been very boring. It's been consolidating. There's been a lot of indecision, and that's where the edge lies. The edge really is in the implied move versus the real move. And the market obviously was pricing something else versus what the reality is. Volume's been tapering off. Stock's been consolidating sideways. As an option seller, we are benefiting greatly by simply doing nothing, literally nothing. All I've done is gone over to my phone Fridays, Thursdays. I've gone over to my phone. I've looked at the Meta options chain, spent maybe 5 minutes, and that's it. That's literally it. And collecting $500, $700, $800 a week. That's all I've done. And that's why option selling becomes so boring, so sexy at the same time, is because you're not doing a lot, but you're collecting a lot of premium for literally just capturing theta decay. That's all that's happening, is as the stock continues to trade sideways, we're just capturing premium. We're just harvesting as much as possible for as long as possible. And if for one day Meta starts running, great. We can roll, we can let it expire, we can collect all that premium and capital appreciation, and we can start again. So that's the beauty of it. Okay, am I the only person who kind of hates AI? Depends on the context. I really do think it depends on the context. By the way, we're going to get back to the questions. For everybody who's joining in, be ready for unemployment numbers in 13 minutes to go. And we've got the very important unemployment numbers coming out. So we're going to open up the BLS website. And today is the day we're going to wrap up the entire year of 2025 for the last and final report for the unemployment situation. December 2025 scheduled to be released today, January 9th at 8:30 a.m. Eastern. So hope you all are ready. 13 minutes to go. We've got a poll going on right now with over 100 votes. I want to see this up to at least 200 votes in the next 13 minutes so we can have a pretty good data point to anchor it with. 43% expecting for unemployment rate to come in over 4.6%. Right now, the consensus is exactly 4.6. So 4.6% is the market expectations. Definitely participate in the poll. We've got that going on right now. And in the next 10 minutes, I really want to see more votes. I want to see it over 200. And right now, 42%, majority expect unemployment to be higher, to be more than 4.6. Okay, so when it comes to AI, again, it really comes down to the context and the person that you're talking to. I do think that AI, just like with any other technology, it has its pros and cons. Just like with anything else, has its pros and cons. We just have to weigh the pros and the cons, because at the end of the day, a lot of people can feel that social media was terrible. Social media is the end of society or humanity. Like, we're not going out, we're not actually having real conversations, we're not connecting with people in the physical world. All of that is true, but at the same time, social media has its pros as well. So again, it's pros and cons, right? So just like with any other technology, with artificial intelligence, of course, we don't want to go overboard. And again, depends on the context, because AI has a lot of application. It is making people more productive. It is making things easier. It is making information and access to information a lot more fast, easier. All those things are true, but at the same time, it is also, there's cons, right? So again, it's pros and cons for everything. So, and yes, unemployment is rising fast. College grads having trouble finding jobs. A lot of knowledge work is starting to evaporate. 100%. A lot of knowledge work is indeed starting to evaporate, and it's really going to come down to upgrading skills, and that's why I think it's really important to always be the best student you can be. That was one of the lessons learned or shared in my 2025 update, is always wake up as a student. Like, you can always learn new things, you can always learn new skills, and you can always learn from different people's perspective. And that's the only way to grow. So that is going to be my goal, is to continue to learn more skills, and apply that in the real world and be more practical about it. So both pros and cons are always going to be there for any piece of technology that comes up. Okay, let's see. It's my guilty pleasure, MVC cruise out of Orlando. Let's go. Yes, we're going to be doing that as well. We got to do one of these days, we got to do a cruise meetup for all the MoneyVest members. I think it's going to be fantastic. I think it's going to be a lot of fun. So we'll definitely do that as well. What's your strategy with Netflix? With Netflix, it really is just waiting for the price to get down to $80, $82. It's been flirting, down to those levels at $90 now. It's been coming down to $89. The plan is simple: $82.50, $82. That's the level that I feel a lot more confident, comfortable. If it gets down to that price point, I will be looking at either selling puts or simply doing a buy right for Netflix at those levels. Examples on individual stocks like Intel is why I like doing wheel on individual stocks and invest in index ETFs for the long term. That's amazing. It's always lucrative in doing and running a wheel strategy for individual stocks that you are very confident in, because the wheel can really generate some good premiums, some good income for you. I'm on back-to-back meetings with a lot of members. This entire week I've actually talked to more than 25 people in our community, and all of them have started with options in some shape or form with their first trade or second or third trade that they're taking, and they love it. They absolutely love it because it allows them to generate some good income, $200, $300 a week or per trade, and that allows you to reinvest that capital back into the market, either in your long-term portfolio or back into your options portfolio. But it really becomes a more of a strategic strategy where you are growing your capital, and then once you grow your capital, then it becomes more of a math problem, because all you're doing is the same thing just with a different capital base. That's all it is. So it doesn't really matter, when it comes to options trading, how much you're trading with. The most important question is, how can you maximize with what you have, and how you can actually become an expert in the strategy that you're trading, because that is more important than the limitations on the capital that you're working with, because eventually the money will come. The first thing is focusing on your strategy, focusing on risk management, becoming the best options trader out there, and everything else will follow. So that really is the whole idea behind it. I like SPY and QQQ for long term. I know you like SMH. What are your thoughts on adding SMPO ETF for the long term? So yes, SPY, QQQs, VUG, Vanguard ETFs are always great. SMH is one of my favorite ones. And then you said SMPO. I don't think I can find that ETF right now. Maybe it's a different name. So you want to let me know that, Kemp? Okay, rate cut. Right now, we are expecting a rate pause. There's over a 90% probability for a rate pause. We'll find out what happens in the next 3 weeks. What do you think about Cadence Design Systems? Seems to be a strong G-Base as supplier for all big tech like NVIDIA. So Cadence Designs is actually part of the shopping list. It's a fantastic business, very, very profitable, great margins, and growing as well, revenue year after year. 22-25% margins, profitability strong at over $1 billion in net income per year. Yes, it is trading at an expensive valuation, which is exactly one of the reasons why we have a lower buy target on our shopping list, but it is part of the shopping list. So 82 times earnings, 16, almost 17 times sales is an expensive stock. I've got a couple support levels for Cadence at 244 and 194 for this stock at the moment. Okay, what is Bitcoin ETF you hold? I have BITX. I'm upset with you that my meta calls are not printing yet. I know you, Isha, I know a few other members that are really not happy with me because of meta, because I've just been selling calls, and I know a lot of people have bought calls. But it's kind of crazy that the ones that I'm selling, we have members in the community that are the ones that are buying those calls. But look, selling options over longer time frames, in my opinion, and from the studies that I've done, statistically speaking, will always win or have a higher probability of success by far, because it does win in 2 out of the 3 scenarios, right? When you're buying options, you are really betting on one of the 3 scenarios. So when you're buying a call, you're really betting the stock is going to go up, right? The stock can either go up, go down, or go sideways. And option sellers do benefit on 2 of those 3 scenarios. If the stock goes down and sideways, option sellers benefit when we're selling calls. When we're selling puts, we benefit when the stock goes up or sideways. And so that's why the probability, statistically speaking, is a lot higher. And that's really what it is. When you're trading stats. That's all you're doing. You're not predicting. You're not trying to predict what the price is going to do tomorrow or next week. Because to be frank, nobody has any idea. Not you, not me, not anyone in the world has any clue where the prices are going to be tomorrow or the day after. If they are sure, they're definitely lying to themselves or you or everybody. And so we are here to just trade probabilities, trade stats. And a lot of the stats for options are available. We can study them and we can use them to our favor. That's really what it is. Okay. That's really nice that they are making $304 a week, but how much capital they're working with, $10,000 or more. Yes, so that really is the starting point, $10,000 or more. And the way to think about it is that if you put that money into a bank, what is going to be your return on collateral? That's really the way you have to think about it, because if you're trading or investing with, let's say, $10,000, what is the return on collateral you can achieve on that capital, right? If you're making, let's say, 2% a month, just hypothetically, that's 24% a year annualized. 1.5% is 18% per year annualized. And those kind of returns, obviously, you will never find in a bank, right? You will never find with a high yield savings account or an FD or like a fixed deposit anywhere else. The only other place where you can find it is when you are investing long term for growth stocks, and that's more of a capital appreciation play rather than income generating strategy. Income generating, even real estate won't give you cap rates or net cash on cash returns of over 18 to 20%, which is very unlikely. So that's the way you have to think about it, right? Capital is what you're deploying, and what is the return that you're getting? That is your return on collateral. That is literally investing in a nutshell. So that is really what it comes down to. Okay, 3 more minutes. 3 minutes left. Again, make sure that you drop a like, subscribe, and share this live stream with as many people as possible. We are ready for the report for unemployment to wrap up the entire year of 2025. And I'm going to update this as soon as 8:30 a.m. Eastern hits. And we're going to open up the PDF to better understand where we sit on the unemployment rate. We've got over 200 votes, almost 200 votes. So please make sure that you participate. 32% expecting for unemployment rate to come below 4.6. 27% expecting at 4.6. And 41%, majority of people here, expecting, almost half of the audience expecting for unemployment to come in over 4.6%. If it comes in over 4.6%, I do think the market's reaction could be positive. It could be bullish, but on a short-term basis, because even though it's a good news for the market, increases probability for a potential rate cut, it also increases the probability of a potential recession as well. Not saying that it's going to happen at over 4.7, 4.8% unemployment. It's still pretty low, relatively speaking, but it definitely increases the odds of having one. So it's both going to be a good and a bad news. If it's under 4.6, comes in at 4.5, 4.4, I think that's going to be a great news as well. So really, in terms of these outcomes, because market's already pricing in a pause, right? So how much more of a pause can we really expect? So either of those scenarios, rationally speaking, could be bullish, but then you never know. This market is crazy. Anything can really happen. As I said, I don't like to predict, but we'll find out what happens in exactly 1 minute. So very quickly, I'm going to arrange these things. We've got QQQs here. We got SPY over here. So on this, we've got both. We'll take a look at the market's reaction, and then we'll reload this page as soon as BLS numbers come out in less than a minute. Hope you all are ready. Drop a like, subscribe, share this live stream so we can take a look at these numbers together. This is it. Last number, last report of 2025. We're going to end the entire year once these numbers come out in about 15 seconds. It's been a while. After multiple reports, missing reports from October, we finally have the December numbers, and it has been creeping up. We've gone from 4.1% in June to 4.6% is where we are now. Okay, let's do this. It is indeed 8 a.m. Eastern, and we are looking at unemployment rate sitting at around 4.4, coming down 4.5 to 4.5. It's been revised down from 4.6 to 4.4% is where we are for this number. And in terms of the unemployment, we are looking at 64,000. 64,000 is the number. Civilian unemployment persons is also coming down from 7.7. It's been revised down for the November number, and December coming in at 7.5 million. So markets are indeed pushing up a little bit here. So 33, 34 basis points here for QQQs, and S&P 500 at 29 to 30 basis points. We came in lower is where we came in. And the previous numbers also got revised down, by the way. So we were not at 4.6. We were indeed at 4.5. So not only did we get a 4.4% reading, which is significantly lower than what the market was pricing in at 4.6%, we came in at 4.4, so 20 basis points lower. But then the last month's number, November, also getting revised down. I mean, these numbers could not have been more cooked. I mean, I have no trust issues in these numbers at all. I'll be super honest and frank with you guys. I rarely say that, but this is crazy. I do not believe these numbers at all. 4.4% is where we are for these numbers. So very, very interesting, to say the least. So here we go. 50,000 jobs added in the month of December. Unemployment rate, 4.4%. Yeah, sure. Changed little in December. The US BLS reported employment continued to trend up in food and services, drinking places, healthcare, social assistance, retail, trade lost jobs. And the previous numbers also got revised to 4.5, from 4.6 to 4.5. And number of unemployed persons. So again, a metric that we track very closely, which we're going to update on our spreadsheet now. This was at 7.83. So if you come over to my spreadsheet, 7.83 was the previous number in November. And they're telling us that we are at 7.78. So a small revision to the downside. And this number coming down, 7.5. So 7.503. Enter. And this ratio gets better at 0.95. So on surface, on paper, the good news is that yes, we're moving in the right direction, which is what we want, but who knows what the reality really is, because it's hard to believe. It really is hard to believe that we are at 4.4% unemployment, but who knows? Hey, it is what it is. Burke says, oh, come on, what are the odds that someone Trump appointed specifically for that role and specifically to ensure better numbers would ever doctor the numbers? I mean, come on. Yeah, I mean, it is what it is. But see, that's another thing that we talked about in our previous updates, and I think this was back in December. Literally last month, I was having this discussion when inflation numbers came out. If you guys remember, I think the market's relevance for this number is really dying. I think who here agrees the markets no longer care about the data that's coming out? Like, let's just do a very quick poll. We'll do a very quick poll. Do you believe the markets actually care about economic data? Yes or no, right? We'll just do, so this is really, in other words, is this data relevant? All right, we'll just do this poll, and we'll I'm sure we're gonna get a very good response from this, because market has not been moving to inflation. It has not been moving to unemployment. It has not been moving to economic growth, GDP numbers. It literally has not been moving to these numbers anymore. So I'm leaning more towards the no, because I don't think that this economic data is relevant to the market anymore, because of just numbers not making much sense, and there's a lack of data. October numbers weren't there. November we had half a month, And then when you look at the revisions, I mean, the variance is huge. I mean, hundreds of thousands of jobs that were originally reported are then all of a sudden gone. They were never there. And you're just getting these huge revisions in the market. And as a result, it's gone to a point where you can't even forecast well. You can't even try to price that in to the market. Yeah, Wall Street Holics puts a really good point. It's relevant as many algos still designed to incorporate these numbers, 100%. And that's what we have, right? That's the only data points that we have. So it's kind of a weird situation that yes, on the surface, that's all we have. So it is relevant, but in reality, it is not the real picture, at least not in my opinion. So it becomes a bit of a gap. So as Francio says, the risk of not having true data may lead to a major gap and bigger bubble in the market. And that, is also a very good point, because market bases its expectations on forward-looking assumptions, and if that assumption is not the reality, then that's where the discrepancy comes in. That's where the disappointment comes in. So it's all a game of expectations. If the market is expecting one outcome and another outcome happens, then that is a reset of reality, and that's why it opens the market up for more risk, unless the market is pricing all this appropriately, which it almost never is. So Ivan says, don't tell you, I didn't warn you. If not today, then next Friday we will have a big sell-off. I'm just getting cash ready. Well, cash ready, we'll always be cash ready. We'll always be prepared for sure. But look, overwhelming 60% of participants from 100 people that voted now don't think that these numbers are relevant to the market or to their own forecasting. So in other words, is the data relevant? 60% say no. So that right there is the answer. Even on the surface, it may feel like, yes, it is relevant. Algos are trading on it. That's all we have to analyze with. But the market has not moved much in the last two inflation reports and unemployment reports that we got. So begs to question. Pre-market right now pushing up 40 basis points. So we're seeing a little bit of momentum and 38 basis points for SPY as well. I think it's going to essentially reiterate the possibility of a rate pause. So I think rate pause is essentially a done deal now. We're going to see a rate pause in January, towards the end of January, when the Fed meets next. So even on Polymarket, I think the last time it was, let me just take a look. Will Fed cut rates, or let's take a look. Fed decision in January. Yeah, so 96% right now is we're going to see no change. So this is where we are. 97% no change, and then 3%, 25 basis point decrease. So that's where we are. And the Fed Watch tool, I think, was also somewhat similar, 90% probability that we're going to see a rate pause. And I think today's report was the only sort of bottleneck that we were waiting for. And I think after today's report, it's going to be a done deal that we see a rate pause for the market. 50 basis point decrease, jumbo cut, 1%. Still expecting. The market seems to care when the market makers want to push the market down, 100%. The data is not driving the narrative; they're driving the narrative. They fit the data as per their narrative. It's not the other way around. It is crazy, I know. But yeah, so overall numbers for everybody who's joining us now, we had over 50,000 jobs added in the month of December. Unemployment rate sitting at 4.4%. And then we have private payrolls at 37,000. Manufacturing payrolls, only 8,000 jobs lost. And the prior number also revised from 4.6 down to 4.5%. And 56,000 is the actual number of jobs added in the month of November 2025. So that's where we are. Spreadsheet is indeed updated. So you'll notice as soon as I updated it to 7.53, unemployment rate drops down to 4.4%. And the ratio is now sitting at 0.95. this is exactly what I think the markets wanted to see, and we are seeing right now. So pretty good numbers. Okay, let's get back to the Q&A. Any questions? Let's talk about it. Any specific stocks? Let's talk about it. And I'm here to answer any questions. We got another 30, 40 minutes to go over as many questions as possible. The last time we got the report in December, the stock went up pre-market and then to drop in the second half of the day. Yeah, I mean, it's possible that we see that kind of volatility again. Let's see what the market open gives us today. What do you think about SMCI, Bloom Energy, BMNR, Oklo, HAL? Let's cover as many as possible. So, Halliburton, very, very volatile, very similar to Chevron and Exxon. On Monday, gapped up. Tuesday, went down significantly. Wednesday, went higher again. Thursday, went higher again. So, I do still think Halliburton is going to be a 2026 stock. Overall, very, very strong consolidation sideways. I've got a target up to $40. That is the resistance that I'm watching for Halliburton there. Bloom Energy is incredibly overbought right now, so I would encourage caution given how extensive it is. Technically speaking, over 71 on the RSI monthly, weekly 63, and with a serious negative divergence there. So we got a huge resistance all the way up here around 147, and we've got a support down here at around $75, $74, and right now we're starting to see that momentum back higher. So that is going to be that resistance to watch. Okay, SMCI, we have covered SMCI quite a few times on the channel before. This is the overall technicals where it was inside this rising wedge, which, by the way, is also the chart for the S&P 500 right now. It's on a very, very similar rising wedge pattern, as you can see right here, making higher highs and higher lows. So if you do get a breakdown, then that can potentially lead us for a 5% pullback, 5% dip. So something to keep in mind. But for SMCI, also very similar. Rising wedge eventually broke down from that channel. And right now trading below this area of support. Ideally, I can move it down a little bit further as well. If it breaks below 29, next support is going to be $22, $23 for SMCI. Netflix we covered earlier, so if you could go back and check out the analysis on Netflix, that would be great. SoFi, I'm very bullish on long term. We'll continue to add more shares in the low 20s, $20 to $25. We'll continue to add more shares and then sell calls if I want to. Right now, I do have 12 calls at $25 for end of this year or middle of this year, which I'll decide if I want to roll or close them and sell new ones. But SoFi long term, I remain very bullish and optimistic on. SOXL, if you had time to check also, please. So SOXL is going to be very much of a semiconductor stock, right? Leveraged ETF. So it's only a tradable asset. I would not treat this from a long-term perspective here. But this is the overall higher high, higher low, a little bit of a rising wedge. The actual analysis has to be done on SOXX. And you can see a very similar pattern there. If you do see any kind of pullbacks, corrections, MoneyVest index goes down, volatility goes up, we will simply be adding and taking another trade on SOXL. So for leveraged ETFs, it's very important for us to be very precise and very selective with where we trade and how we trade it. TQQQ is the same way. SOXL is the same way. If the opportunity presents itself, we will simply just take it. So SoFi covered. What do you think about shorting Palantir? I would not risk. I mean, there's a few stocks that you just do not touch when it comes to shorting. Unless you have a lot of holding power and you have a very high conviction and a lot of capital and deep pockets, maybe you can make that work. But some stocks, I mean, what are the companies that you would put on the list of like a no short list? Like stocks that you would not touch for shorting ever. People have been burned, careers have ended, hedge funds have closed down because they try to short these stocks. Tesla would be at the very top of that list. Palantir would be another. It has burned a lot of short squeezes. A lot of shorts have just regretted shorting those companies. So I think Tesla and Palantir would be at the top of that list. Maybe Nvidia you can put up there. But Nvidia wasn't really a widely shorted stock anyway, but I think Tesla and Palantir definitely have faced a lot of heat from Wall Street over the years. A lot of analysts have come out, put ridiculously low targets, taken short positions, try to bring it down every possible way. And both of these companies have just continued to crush them. So those two I would avoid. But let's see if we can build a list of companies that you just definitely want to avoid. GameStop is another one. However, I do think that eventually Wall Street did win because GameStop and AMC, they both ended up coming down eventually. So, I mean, it's still much higher from where it was. You know, it's kind of found a very strong base in the 10 to 12, 15, $20 range. But this was, again, the crazy momentum coming from $1. I think AMC is the one that actually came back down. Yeah, $1.40. So anything Michael Burry suggests, yes. What's going on with Rubrik? Very good earnings, dropped all the way back. Is NVO still interesting for you? Yes, Novo Nordisk is still interesting. You know, the thing is that any biotech pharmaceutical stock is going to go through these cycles of, you know, because of their businesses being very cyclical, depending on approvals and the, you know, trials that they're running, they're going to be very cyclical. Now, Vertex Pharmaceutical also went through something very similar. Last year was not a good year for Vertex. It's been part of the shopping list for a really long time. And it has been moving up since August. From 360s back up to 470. It's up over 33%. From that area of support, it's almost back up to all-time highs. So very good to see that. So with any pharmaceutical, biotech company, medicine stock, you're going to find a lot of volatility. But you want companies that have exceptional fundamentals, great cash flow, great revenue, great balance sheets, and they're the ones that can survive through these tough spots. So Vertex continues to be a higher conviction. NVO continues to be a strong company that I do strongly believe in over the long term still. It's been on a downtrend, lower highs, lower lows, so not having the best few years since September 2024 all the way till now, or October. So that 1 year was a bit of a rough patch, but it needs to break above that $60 range in order for us to get up to 80 and eventually flip the script for some higher highs and higher lows there. DBGI. Let's take a look at what this company is. Digital Brands. I think we may have done some analysis on this, but doesn't look like it's a very big company. 140 million market cap and just 100,000 shares of volume. I would skip this. I would try to avoid it because you never want to look at companies that are really small cap, micro cap with very low volume, because then you run into liquidity issues, wider spreads, stock manipulation. There's going to be a lot of that. So try to avoid that as much as possible. At least look for companies that are super liquid. DBGI. Okay. Yeah, that's the one that I'm looking at. Yep. Or is it DGBI? No, there's no ticker for DGBI. So DBGI is the one that we were going over. All right. Portfolio suddenly green. That's great. Rubrik. Let's take a look for this one. RBRK. Stock is slightly down. Looks like we've done some analysis here. Falling wedge. Huge breakout, getting rejected, selling right back down. Support level is going to stay at $63, $64 again. That's going to be the target and resistance right now, all the way back up to $74, $75 for Rubrik. So that's going to be that resistance. Very strong support down at $63, $64 for this stock. Any thoughts about Tesla and Oklo? Oklo, I've been hearing a lot. A lot of you guys have been mentioning Oklo. It's actually part of the hot watch list as well for us. 17% higher pre-market. It is part of the hot watch list for trading. So 17% higher. Let's take a look. Meta's nuclear deal, boosting shares in Oklo and Vistra. So Meta backing in new reactor projects with Oklo and another developer. Meta's also reached a deal with Vistra, the power producer, to buy and expand the output of 3 existing nuclear plants in Ohio and Pennsylvania. Oklo is indeed pushing higher pre-market. deals with Meta Platforms is the reason behind this surge on this Friday. So it said that it struck a deal supporting the development of 1.2 gigawatt campus in Pike County, Ohio. Energy produced at the site will be used to power Meta's data centers in the region. So that's a pretty big deal. How is Meta reacting to it? Meta. 648, slightly higher, 30 basis points at the moment. So as long as it stays below 650, I'm happy. So for Oklo, I think we've done some analysis. It really, again, fundamentals. You can talk all about the story, all about the deals that they're doing, all about the collaborations, the contracts they're winning. But if none of that quantifies, if none of that materializes down to the actual revenues and earnings, it's just as good as nothing. It's only ever going to be a trade. It's for it to be a long-term stock, fundamentals have to be incredibly strong or improving. So in that regard, I think Oklo is a fantastic trade opportunity. And we had a support at $70. It's back up to 115. It's going to be coming up to that resistance now. If it gets rejected, support level is going to be back at $85, $86. If it does break out even further, we're looking at that next resistance up to as much as 147. So that's where we are for Oklo. So APLD, I covered yesterday. So extensively, we talked about APLD yesterday in our live stream. So if you can go back and check out that live stream for Applied Digital, we talked about the valuation, we talked about the fundamentals, we talked about the forecasted earnings. If I remember correctly, it's trading at over $8.5 billion of market cap with revenues expected at $550 million. Lack of profitability there, trading at about 15 times sales, a bit more on the expensive side. It's come down from 30 to 15 based on the future sales there, but profitability needs to improve. Margins and cash flow, everything needs to get better for APLD. So we covered that in a lot of detail yesterday. For Meta, I closed my covered calls yesterday. It would be good to sell another covered call when price gets to 650 or wait longer. I would look into selling a covered call today. It's Friday. So what happens is, if you want to collect a little bit more premium, try to do it on Fridays, because if you wait until Monday, the prices will change, obviously, because there's fewer days until expiration if you're looking at next Friday expiration. So I usually sell weeklies. So if I'm selling weeklies, I try to sell them by Friday for next Friday, or at best, I try to sell them on Thursday for next Friday, because most of the calls that I've sold have been for not 7 days, but 9 days out. 9 days out, meaning by Thursday, I'm closing my existing Friday call for 85 or 90% profit, and then I'm opening a new one on Thursday or Friday, depending on which day is very green or what option pricing I'm getting. If I'm closing it out on Thursday because Thursday is red and that's when my calls are going up, and then I don't want to sell a new one, I want to wait until the next day, which is Friday, or if I can catch a dip or a recovery back. So what happened yesterday, obviously, was that I closed my Meta call, 85% profit right at the open, and then intraday Meta rallied back up. So it was a nice little 2% jump there, and I was able to open new ones for next Friday. So it was 9 days out on that recovery. Otherwise, I would have waited until today, and since Meta is green today, I would have sold for next Friday. So that has been sort of like the playbook for me. Okay, SG is Sweet Greens, if I'm not mistaken, is it? Yep, Sweet Greens. My cousin used to work there, so I was looking into that stock as well. It's been, I don't know where to start. It's just been getting crushed. 44, 45, down almost 90%. I think there's better stocks to look into. I mean, revenue's getting better, margins are getting better, but profitability, that is really what's important here. So if you're looking at this $6, $6, 615, 620, that's a decent support. Risk reward, sure, you could argue is good because it's already down 90%. Margins are getting better. Soon it could be profitable, but only invest how much you can afford to lose, because again, with any company that is not very well established in terms of financials, revenues, cash flows, profitability, margins, there's always going to be that risk. And so with this, let's take a look at their balance sheet as well. I'm curious. They have $226 million of net debt, meaning slightly more debt than cash on the balance sheet, which again is not a not a terrible thing, but if you look at their forecast, they're not expected to be profitable anytime soon. 2028 still expected to do losses, and revenue growth is modest at best. So it's not a dividend stock, it's not a growth stock, it's losing money. I feel like there's better opportunities out there. If my cost base is $24 and I sell a covered call for $30, if it gets in the money and I will lose my 100 shares, but profit $6 per share, is that correct with covered call? Yes, that is 100% correct. You would sell your shares at your strike price. That's what you're obligated to sell them at. And plus you will collect the premium. So your profit will be the profit per share, which is your strike minus cost, plus the premium that you collected. That's your total return profile for that trade. 5K Friday. Yes, Amazon is indeed almost at $5,000 on a split adjusted basis. Right now, $245. I think it needs to get up to $250 in order for it to be at $5,000. And we're almost there. Amazon, for the longest time, a stock that's been written off by a lot of people, has proven itself that it can actually lead this market higher for a very limited time. I'm sure by the end of this year, it will still be lagging. But 6% green year to date. It's performing better than S&P, NASDAQ, gold, silver, crypto, and all Magnificent Seven stocks. So do not write it off yet. But I'm sure Amazon will do what Amazon does best. Lag. Okay, let's take a look at Fiverr. Fiverr International selling off aggressively, down 7%. All-time lows. All-time lows. Almost all-time lows. What a chart. I mean, this is just insane. This is crazy. This is why the stock market is so insane. You can have a stock go up 1,700% in a span of a year, and then the next year make it go down 90%. You know, this is crazy stuff, crazy volatility. And it's not just, up 20, down 30, up 50, down 40. No, it's up 1,700%, like 17 times. 17 times. So the market cap was 100 million. It went up to 1.7 billion. And then it dropped back down to 100 million. I mean, just what? Crazy. Volatility today. We'll take a look at Marvell and Dell very quickly. Perfect. I made 8 CSP trades, but I've gotten in the money yet. I have got in the money yet, collect premium, but I would like to get in the money and sell some covered calls. Yep. As long as you are, expiring out of the money, that's fantastic. That's great. That's like a dream. Writing puts, collecting premium, and never getting shares assigned. That would be like any trader's dream. It's like you're collecting premiums every single week without having to deal with the actual headache of owning stock. But yeah, in order to start the wheel, you need to own the stock and then sell covered calls as well. Okay. HIMS, please. It doesn't seem to be moving, which I'm glad. But let's take a look at first Dell, and then we'll come over to Marvell. Okay. Marvell Technology. Uptrend, very nice. Looks like we've done some analysis, a lot of analysis on this. $70 billion market cap company. Quarter over quarter, it's been fluctuating quite a bit. Revenues rather inconsistent. Earnings expected to grow fast from $2, $3 to almost over $6, more than 100% gain or appreciation there in terms of earnings. Revenue from $8 billion to $17 billion, so more than double in a span of 4 years. Valuation, 30 times earnings, 9 times sales, so not bad at all. Trading at quite reasonable valuations there. And this is the overall uptrend, higher highs and higher lows. Support level is going to stay put at $67, $68, down to a much stronger support at $46. $46, and I am sold on Marvell, down to 35. 35 to 45. That's a good range for Marvell. Dell has been performing very well, if I remember correctly. More or less consolidating now, but last 1 year, it is down 1.2%. So 1 year performance has been pretty poor, but since 2020, stock's up more than 10 times. So very strong in the last 5 years. You know, those reels keep coming up that that COVID was now 6 years ago, which is insane because if you think about how fast time is flying by, it is quite crazy to think that we had experienced that 2020 March crash 6 years ago. 6 years ago. That's wild. And it's just been like a snap of a finger. Snap of a finger. So the poll, 258 votes. The yes, 51%, 49. So it's a pretty split vote there. So we can end it now. But yeah, crazy. Dell consolidating sideways. Support level is going to step at $117 down to $85, $86 for Dell. Lots of consolidation sideways in that range. Henry, APLD been holding shares for over a year and decided to do covered calls that will more likely expire in the money. What's your take on this company? If your goal is to sell covered calls that have a high probability of expiring in the money, I think it really comes down to just picking a strike that is very close to the money, right? So if you look at 1 week or 2 weeks out, you can look at calls like 33, 32.50 that are going to be very close to the money, right? And with those, higher probability that it's going to expire in the money and you're going to have your shares get called away. So, but make sure that your strike is above your cost basis. That's rule number one when you're selling options, especially calls. When you're selling calls, make sure that your strike is above your cost basis. Otherwise, you're guaranteeing yourself a loss. So SPY up 42 basis points. We got QQQ is up 54 basis points. NVIDIA pushing up to 186 now. Meta 646, 647. So that's good. Stable at 650 Meta. And Tesla is also moving up over 0.5%, getting up to over 438. Volatility, somebody was asking earlier. VIX is sitting at just over 15 right now, with crypto sitting at just over $3,000 for Ethereum. And Bitcoin just under $91,000 as well. Crude oil at just over $58. Bill Ackman is very vocal and it's cheap for Uber. Uber, I have done analysis. I think I've done a couple of videos on Uber. If I'm not mistaken, is Uber part of the shopping list? I don't think it is, but maybe. No, it's not. Okay, it's not. But no, Uber I like from a long-term perspective. So Airbnb and Uber are two companies that I don't think are on the shopping list, but I'm still very bullish on them long-term. Resistance for Uber is going to be at $90 up to $101. So, last year's net income, $9.8 billion. We're looking at $182 billion worth of earnings or market cap, sorry. So that's about 20 times earnings on a trailing basis. So yes, you would be correct in your assumption in saying that it is not expensive. Yeah, 10 times is going to be 90 billion and 20 times is going to be 180 billion. So yeah, 20 times their trailing 12 months and earnings are expected to only accelerate further. 2025, 537 and then accelerate up to 531. More or less stable, not accelerating that much. So yeah, I mean, maybe that's why it's trading at a slightly lower earnings multiple because of the lack of growth there for Uber. What are the levels of AMD? So Advanced Micro Devices. We're looking at support around 194, 170 is another support. Yes, so I actually forgot to mention that AMD is another stock that I'm considering in the options portfolio. So if there's four stocks that I'm planning on adding to the options portfolio for this year: Broadcom, AMD, Netflix. The last one was Broadcom, Palantir. And then last but not least, I know I keep adding it, Mercado Libre. Melli is another one that the dream, of course, is to trade options on this one day. You need about $219,000. based on the market price. But yes, the idea would be to accumulate shares slowly and steadily in the options portfolio for this to trade options on this. Because if I'm just trading Melly options, I'm set. That's good. Don't need to do anything else. Weekly calls. Premiums are showering. $2,300, $2,600. Oh no, more, because it just got updated. So $3,500, $3,300. These are at the money calls. Similar to what I'm doing with Meta, we'll be doing for Melly as well. Melly and Meta. We were talking about this in Discord. It's kind of sounds like a couple. Meta and Melly, Mr. Meta and Mrs. Melly. That's gonna be the money makers. Just gonna be trading options on those two. So we'll be doing that, and then Palantir, Broadcom, and Netflix, as I mentioned, at $82, and then finally AMD. AMD is another one that I want to add for 2026 in the options portfolio. So support level 194 down to 170. But I do want to add it at lower levels. So if I'm looking at selling puts, AMD I might consider at 170. Palantir I'm looking at 150. Broadcom I'm not gonna wait a little too much, but at 320s is what I'm considering. Let's take a look at the valuation very quickly. Earnings for this year are $10. So 33 times earnings based on 2026. $14 for next year, 2027. So 337 divided by 14, 24 times earnings. So yeah, I think 320 down to like sub 300 would be ideal also. The 280s would be perfect for Broadcom. So that's that. And then Palantir, as I already mentioned earlier, Netflix $82, AMD we covered, and Melly as well. I'd rather buy real estate than to own a Melly contract, to be honest. Really? Really, Dave? I mean, I guess you're not wrong. Real estate gives you more variables you can control, but the return on collateral is going to be substantially more in owning a contract of Melly than in owning a piece of real estate. Because if you do the math, right, even if you do a buy right, pick it up at 2179, sell next Friday's call of 2200 for 3300. So, we're doing 33 divided by like 2179. That's about 1.5% per week for 1 week. Even if you average it out to like, let's say 3% a month, it's like 30 plus percent per year annualized. So yeah, I mean, it's kind of like weighing the options of risk and control. And it's kind of crazy, right? Sometimes ownership doesn't give you control. That's stock positions 101. Just because you own it does not mean you control it. Does not mean you control the fate of that stock. And so with real estate, it's the exact opposite, right? Ownership indeed gives you a lot of control. More variables that you can dictate in trying to, understand the outcome. So that way, it's very different. But at the end of the day, it comes down to conviction as well. So yeah, 100%. There's so much I can do with real estate. It's in my control, but there's only one thing I can do with Melly, and that's a lot of money to not have full control. Yes, 100%. And that's what kind of makes real estate slightly more fascinating than stocks. Come to the Melly side. What do you think about now? Maybe it's overdone, and so it is a good candidate for swing trade or options play. Can you look at DocuSign, and what's your opinion, please? All right, let's take a quick look on DocuSign here. No, I think we'll come back to the stock and real estate discussion as well. But I love all three. I love stocks, I love options, and I love real estate. It's an addiction. I'm not kidding. It really is a problem now at this point. All three have their own pros and cons. There's never, in my eyes, there's never a competition. There's never a comparison that one is better than the other. They all serve a very different purpose in anyone's real portfolio. And in my opinion, all three of them can really boost your return while offering a lot of diversification and a lot of risk management. So for me, I am honestly in love and would love always, long term, doesn't matter, will continue to invest in stocks, trade options, and invest in real estate. I think it's fascinating. Underwriting is phenomenal. You get to work with a lot of numbers, a lot of math. You get to nerd out on so many different scenarios, work with spreadsheets, so many spreadsheets, and then just have fun with it. And of course, make money along the way. So for DocuSign, this is the overall pattern. Lower highs, lower lows, a little bit of a sort of like a descending / symmetrical triangle. A lot of consolidation sideways here. If it does move up, resistance is going to be at $78, $79. So that is going to be that level to watch for DocuSign. ServiceNow, from a technical perspective, it is starting to look a little bit better. From a swing trade perspective, 5-for-1 stock split. And we've got a support, a rather strong support at 136.80. And we've got a resistance up to as much as 232. So that's the range. Rick, I have 3 stocks. You guys notice the twinkle in Karthik's eye when he says the word spreadsheet. I love my spreadsheets. Probably got like hundreds of different kind of weirdest spreadsheets you'll ever see. Trust me. Weirdest ones. Definitely don't want to open them up at all. I need to break free. I have 3 stocks in my options portfolio, SoFi, Hims, and Oscar. It's a small account, but I'm trying to grow it in Discord. It's very helpful. Thank you. That's amazing. I'm glad it's growing and it's doing well. And happy to help further. AMD 60% CAGR in data center segment. Yep, year over year, that's been incredible growth here. Are you planning to open new positions for those 4 stocks? AMD, Palantir, Netflix, yes. So the plan really is going to be either I'm selling puts or I'm doing buy rights or I'm accumulating shares. One of those 3 is what I'm going to do. So for Melly, obviously, I can't just go out there and start selling puts or do a buy right. I'm going to start accumulating slowly. For Palantir, I'm going to sell puts. Broadcom, I'm going to sell puts. Netflix, also, the plan is to sell some puts. And then for BITX, I'm evaluating the Bitcoin cycle as well, because I do want to add 400 shares of BITX right now. I've got 600 in the options portfolio. I want to get it up to 1,000. I want to lower my cost basis substantially. But I'm trying to decide if it has more downside or if has stabilized a bit. And for that, I have to analyze Bitcoin a little bit better. And it's a tough call because crypto, I can only look at it from a technical perspective and nothing else. There's no fundamentals, no earnings, nothing I can find the intrinsic or the fair value for crypto. And as a result, I'm just trying to decide if I want to pull the trigger now, wait a little bit, maybe add a couple hundred now, a couple hundred later. But that would be the plan for BITX as well. Ray, did you buy a house yet or in progress? So no, I have 2 properties now, all documented in the real estate channel. So we've got a separate MoneyVest real estate channel where I show you everything of investing in real estate. So a little bit of a different strategy, not rental properties, although the plan now is to get into rental properties. So that's going to be the next step. But no, I have documented all of that on the real estate channel. Real estate is great, but slower than market. And for sure, if well located, real estate, most important is location, location, location. 100%. Location is very important. But at the same time, I think a lot of people do neglect pricing as well. And so for me, the 2 most important things have always been location and price. Just like for stocks, it is fundamentals and price. For real estate, for me, has been location and price. Because even the best location, if you overpay for an asset, it's not going to make you any money. You're not going to be able to yield well. Capital appreciation is going to be quite limited. So location alone cannot save a deal. So if location's fantastic, you also have to nail down the price. On the other hand, again, this is a bit of a contrary belief, but on the other hand, even if the location is not that great, if you nail down the price, if the price works very well, then eventually the location improves and gets better. The pricing alone can save the deal long term. But for me, it's pricing would be a slightly higher in terms of priority than location, and only because that really is what determines your yields, your future appreciation, your return. Everything is dictated by the price you pay. And so for me, I'm just a stickler for not paying not overpaying. Like I want a good deal. That's what I want. I always want a good deal. When are you planning on selling calls on SoFi? So I already have about 12 calls on SoFi. The plan isn't to sell any more because I don't want to get rid of my shares. Otherwise, I'm not going to hear the end of it on our Discord. Trust me when I say this. I do not hear the end of it on our Discord. If I get rid of my SoFi, I think forever people in my Discord members will just roast me for life. So I think those shares are for life now. I don't think I can get rid of it. I've already spent too much money on tacos. Can't do that anymore. Kemp, I heard that some people who make a lot of money on stocks are investing in real estate and mentioned the tax benefits as significantly lower the capital gain generating from stocks. Yes, 100%. That applies obviously to a lot of investors in the US, Europe, Canada, everywhere. For me, it's a little bit different. I'm not doing it for tax reasons. Doing it for maximizing gain, having more control, physical asset diversification, rental income, things like that. So for me, tax was not the main issue, but yes, I know a lot of people do it. When you sell a put, what is the duration, short or long? So mostly 7 days to 45 days out. So that's the sweet spot that I'm looking at. Did you do your BM&R vote? I haven't yet. I've gotten a few emails. I have to get around it at one point. I haven't yet. Are you holding BITX shares long or short? I am holding them long. I heard that some people already covered that. Course and Pinterest stock. So $5 for the win. Can I enter into the ZS and AFRM Affirm at these levels? Let's take a quick look. So ZS is part of the shopping list. Fantastic cybersecurity company. Cybersecurity has been moving up, if I'm not mistaken. I think it was, up a little bit. Year to date, it's still flat. But from September 2022, it hasn't moved up yet, much yet. I think cybersecurity still is going to take its sweet time. But I'm still very, very bullish on cybersecurity. So we got Palo Alto Network pushing up, consolidating sideways, but your question was more on ZS, which has been selling off. And we've got a support exactly where it is right now at 218. Very, very oversold. And so in my opinion, this is a very good support there. It's oversold, but there's no confirmation for reversal yet. If it does break down, then we're looking at 155 for ZS. And ZS is another one. I keep adding a lot of stocks. ZS is another one for options portfolio. Affirm, AFRM. So we're looking at nice uptrend here, higher highs and higher lows on longer time frame, weekly time frame. So that is the overall uptrend, and support level is going to be down to $52, $53, aligned with this previous resistance, acting as a good support. And then we've got another support down to as much as $62, $63. And then a resistance up to $94, $95. So if this was a trade, I'd be looking at 62, 63 as a better entry with a potential target up to 93. That's a 47% upside. But now the trade has already started. It's already more than halfway in. So how much more upside there is? Yes, up to 94. That's a 13% upside for 25% potential downside. So the risk reward is not that great. I would table it and revisit it if it comes down to those support levels. Let's take a look at Coursera, COUR. A lot of consolidation, almost at near all-time lows. We got a support level down to $6. That's the level I would watch. Looks like the volume, 3 million, $1 billion business. And resistance is going to be around $10. Pinterest also, I think, the same. Struggling a little bit, consolidating sideways, $40 resistance, support at $23.50 for Pinterest. Yeah, Fortinet is the best. Fortinet is very good. I agree. Fortinet, CrowdStrike, Palo Alto, Zscaler, all four of them are actually part of the shopping list, and they are all, in my opinion, very good companies. Fortinet is a bit more stable and profitable, and valuation's a bit better compared to other companies. 33 times earnings and a little bit over 9 times sales. What do I think about Apple? What do we think about Apple? What does everyone think about Apple? What does everyone think about Apple? Is Apple still the future? What do you guys think? I'm genuinely curious what everyone thinks about Apple. You know, I've actually never owned Apple. I think Apple is just one of those companies that are not never owned, but never had a pretty substantial position in Apple. Never. Only through VUG, I probably have exposure in Apple, but now, especially over the last 5 years, I've never had a substantial position in Apple. It's crazy. Okay-ish smartphone. Apple's revenue growth has slowed down significantly for the last 3 years. It really depends on how it can adapt to AI. They need to step up their AI. Siri is falling behind, but I hear rumors of partnership with Google. Yeah, I mean, Siri is insane. Can't even do some basic stuff. It's crazy. But I agree. I think Apple has done a lot of financial engineering with a lot of stock buybacks over the years, to boost their earnings per share. But I don't know. It really is the ecosystem lock-in. I think that's really what it is. It comes down to the ecosystem for Apple and services. Services, App Store, the ecosystem, that is what keeps consumer in, which is genius, which is very, very smart. But how long is this going to go on for, right? That's the real question, because competition is definitely heating up. I mean, there's for sure a lot of phones that can do things better than Apple. Camera quality, battery, tech, features, functionality, usability, UI, everything significantly better, but it's just the ecosystem lock-in, the use of simplicity, everything keeps consumers locked for Apple. So, but when you look at the fundamentals there, I mean, revenue growth, it's not like it's nothing crazy. 391 to 416. Net income going from 93 to 112. In 2024, we saw revenue slightly 1% go up, profits go down from 97 to 93 billion. 2022, 99 billion to 97 billion. So again, for 3 years, we actually saw net income go down, revenue stay flat. Last year, we saw a slight increase. It's a very, very mature and stable business now. So anyway, so that's all for today, you guys. Thank you so much for joining in. Really appreciate you all. It was a longer, wow. Pretty big drop here for the markets. QQQs dumping. And so is S&P 500, starting to lose a lot of steam there. But yeah, thank you so much for joining. I'm going to jump back into our Discord. Again, any questions, links are going to be down below if you're interested in joining us. And again, there is a limited time offer, 40% off. If you want to get access to Discord, trade alerts, members only videos, educational videos on fundamental analysis, technical analysis, options trading, psychology of investing. There's like 250 plus videos available to watch on our Patreon, as well as having access to the website for the MoneyVest website as well. Thank you so much. Have a great day and a great weekend. I'll see you all in the next live stream. Take care.